High Power Nigeria Limited is a company located in Ekpan Road, Delta State, and has created a niche for itself in the area of manufacturing of a special type of fabric, mostly used by Niger Delta people. In 2009, the company acquired a building for the business within a Crown Estate, Warri, at a cost of 35,000 naira. It also acquired a fabric weaving equipment and a generating set at the cost of 16 million naira and 13.5 million naira respectively. So in 2015, the company began to experience difficulty in meeting its customers' demand as a result of poor performance of its aging equipment. To create a threat from competitors, the company re-strategized and resolved to make a new start in the year 2016 by selling off its assets and proceed to augment the assets of naira. Generating set was 40 million naira and 50 million naira respectively. A new building was acquired on Airport Road for the same business at 75 million naira, while the equipment and generating set was also acquired for 17.5 million naira and 13 million naira respectively. You are required compute capital gain tax, number one. Number two, the rollover relief available if need. Number three, capital gain tax payable, 20-mark question. So looking at this question, we are asked to the capital tax. In this question, number one asset that we have is, while number two asset that we have is the number two asset is equipment, while number three asset is generating set. The first requirement said we should compute the capital gains for each of the assets. So the asset we could separate more than one asset when of capital gain. We compute this separately. So looking at my solutions, the first asset is capital gain tax. The first asset is disposal of building. It's relating to building, the first asset. So on the building, the sales building is for 5 million naira. On the question, the building was sold for 45 million naira. If you look at the question, the building was sold for 45 million naira. So proceed is 45 million naira. Hello? Why cost of acquisition is 65 million naira? The difference between the proceed and the cost of acquisition will give you capital gain. That is for the building. That is for the building. The difference between the sales
Hello, sir. Can you
proceed
share
of
your
40.
screen, sir?
Yeah. So I will advise you open your, the store material on your laptop. So to share my screen, it's not going on my laptop, so I have to use my phone. So in order not to delay the class, so I've made a lot of effort to ensure that the laptop connected to the Zoom. It's not going.
All right, no problem, sir. You can continue, sir.
Okay. Please, I'm sorry for today. Mostly on Saturday, I always be in my office and my system, my network in my office is okay than this. So concerning that, we have three types of assets in this question: building, equipment, and generating set. The first requirement said we should compute what? Capital gain. Capital gain means difference between sales proceed and what? Cost of acquisition. Difference between sales proceed and what? Cost of acquisition. For building, the sales proceed is 45 million naira in the question. Why the cost in which the building was initially acquired was what? 35 million naira. So if you look at my solution, you can just click to my solution. 45 million naira minus 35 million naira, it will give you what? 10 million naira. That is for capital gain for what? Building. Do we understand? Do we understand?
Yeah, we do.
Yes,
Yeah.
sir.
Okay. So for second asset is what? Disposal of equipment. For the equipment, the sales proceed is how much? It was sold for how much? 14 million naira.
40 million naira.
Yes. Why the cost that was initially acquired was what? 16 million.
16 million.
The cost of acquisition in this case is more than what? The sales proceed.
Proceed.
In that case, they don't have capital gain. They have what?
Capital loss.
Capital loss. That was for equipment. So anytime that there is a capital loss, there is no need for rollover. I've explained rollover last week. Hello, class.
Yes, sir. Where with you, sir?
I've explained rollover last week. Rollover relief. Have I explained rollover relief last week?
Yeah. How was we stop this?
Eh?
Yes, sir, you explained.
No, that was where we stop.
Okay, and I explained the type of rollover relief.
No, we've not gotten there. Just
okay. Let me just brief before we do this question. We have to understand rollover relief very well. So let's go to our study material on rollover relief. That was the last part, 2.13. 2.13. So I will come back to the solution. Let me explain rollover relief very well. What is rollover relief? Rollover relief means when you sell an asset, you now use the proceed, that sales proceed that you sell from that asset, you use it to purchase, to reinvest in the purchase of another same class of assets. Take for instance, you sell a building, you sell it 50 million naira. You now use the proceed, that 50 million naira. So you now use that 50 million naira to buy another building. That one is called rollover relief. Take for instance, still on that building, you sell a building 50 million naira. The building was initially acquired 15 million naira. You make a capital gain of how much? 35 million naira. You're supposed to pay a capital gain tax on it. But because you reinvest that sales proceed, so rollover relief simply means deferment of capital gain tax. You defer the capital gain tax to a future period. What that one means is that you will not pay capital gain tax right now when you sell the building until you finally sell the new building that you acquired. That is when you are going to pay capital gain tax. Let me use a typical example. You have a building cost 50 million naira. You sell it, the building was, you sell the building 50 million naira, and you bought the building initially 15 million naira. You make a capital gain of how much? 35 million naira. When you reinvest that 50 million naira, which is the sales proceed, that capital gain of 35 million naira that you make, you will not pay capital gain tax on it. You will roll over it. You will postpone the capital gain tax. You postpone it. How? How do you postpone it? You will finally pay capital gain tax on that building. You dispose the new building in the future. Do you understand? Do you understand?
Yes, sir.
So that is what rollover relief entails. And there are some classes of assets that you can claim rollover relief on. Like I mentioned last week, land and building, plant and machinery, ship, aircraft, goodwill, stock and share. All these, you can claim rollover relief on them. For furniture and fitting, you cannot claim rollover relief. For motor vehicle, you cannot claim rollover relief. So those are the only assets that you can claim rollover relief on. So concerning the rollover relief, there are 3 types of rollover relief. There are what? 3 types of rollover relief. We have full rollover relief, we have partial rollover relief, and we have no rollover relief. For the full rollover relief, the amount that you invested in purchase of new assets is more than the sales proceeds that you realize from the sale of the old assets. That is what for full rollover relief. Let me explain again. For full rollover relief, what that one means is that the amount that you invested in the purchase of the new assets is more than the sales proceeds that you realize from the sale of the what? Old assets. For full rollover relief, at the time of computation of capital gain for that old asset that was disposed, you will not pay any capital gain tax at all. All the capital gain will not be subjected to capital gain tax. You will defer all the capital gain. The capital gain tax that you're supposed to pay, you will not pay it at all for full rollover relief. Why for partial rollover relief? Partial rollover relief arises where the amount that you reinvested, in purchase of new assets is less than the sales proceeds from the sale of the old assets. Do we understand? Do we understand?
You can come again, sir.
Sir.
For partial rollover relief, arises where the amount reinvested in the purchase of new assets is less than the sales proceeds, disposal of old assets, but the cost of acquisition of the old assets. Rollover relief. Three concept is very important. Amount invested from the new assets. Amount invested from the new assets, sales proceed of the old assets, cost of acquisition of the old assets. For full rollover relief, number 1, the amount that you invested is greater than sales proceed of the old asset. It's also greater than what? Cost of acquisition of the old asset. In full rollover, you will not pay capital gain tax at all. For partial rollover, the amount that you invested in purchase of that new asset is less than the sales proceed of the old asset, but higher than what? Cost of acquisition of that old asset. Do we understand?
Yes, sir.
So that is for partial rollover relief. In partial rollover relief, you will pay part of capital gain tax, while some part will be deferred. Do you understand? In partial rollover relief, you will pay part of the capital gain tax, while some will be deferred to future. Do we understand? Now, for no rollover relief, which is the third one, no rollover relief. No rollover relief arises where the amount that you invested is less than the sales proceeds of the old asset, and also less than the cost of acquisition of the old asset. Do we understand? It's also less than the cost of acquisition of the old asset. So for number 2, which is this no rollover relief, the capital gain that arises, you will pay capital gain tax on it full. You will not defer any capital gain tax under no rollover relief. The third one is also called zero rollover relief. You will pay capital gain tax on all the capital gain. You will not defer any tax liability. You will not postpone any tax liability to future. You will pay capital gain tax now on all the from the capital gain. You will not defer anyone because the amount reinvested is less than the sales proceeds of the old asset, and also less than the cost of acquisition of what? Of the old assets. That is what rollover relief is. Most of the action that we normally deal with rollover. Normally deal with what? Rollover. So coming back to this question of number one, let me read it again. You will know that this question is a rollover. Why? High Power Nigeria Limited is a company located in Ekpan Road, Warri, Delta State, and has created a niche for itself in the area of manufacturing of special type of fabric, mostly used by the Niger Delta people. In 2009, the company acquired a building. That was the first asset. The first asset is building. They acquired it in 2009 for the business within Crown Industrial Estate at a cost of what? 35 million naira. The building was acquired 35 million naira in 2009. It also acquired what? Yes. It also acquired what? An equipment and what? Generating set at the cost of what? 16 million naira and what? 13.5 million naira respectively. Those are the assets that they acquire. They have 3 types of assets. Now, the question go further. Said in 2015, the company began to experience what? Difficulty in meeting what? Its customer demand as a result of poor performance of its aging equipment. To care of this threat from competitors, the company re-strategize and resolve that to make a new start in which year? In year 2016, by selling off its asset. They want to sell off the asset, and they want to use the proceeds to acquire what? New one. Use the proceeds to acquire new one. That use the proceeds to acquire, to augment the acquisition of new one. That one means this question is what? A rollover relief question. Because they want to use the proceeds of the old asset to acquire new asset. This question is what? A rollover relief question. So now they are now telling us how they sell them. The building was sold for 45 million, while the generating set was sold for what? 14 million. While the equipment was sold for 14 million, the generating set was sold for what? 15.3 million. So that is how they sell those assets. Now, the next paragraph said a new building was acquired on Airport Road for the same business at what? 75 million naira. While the equipment and generating set was acquired for what? 17.5 million naira and 13 million naira respectively. You are required compute capital gain. So the first question is you should compute capital gains on the asset first. Let's leave rollover first. We have to compute capital gains. We are not asked for capital gain tax too. It's only what? Capital gains. So looking at that, the first asset we compute our capital gain on is what? Disposal of building. That building was acquired 45 million naira. It was sold for 45 million naira. Abi? And it was acquired for how much?
That's 5 million.
35. So the difference between the sales proceed and what? The cost of acquisition will give you what? Capital what?
Capital gain.
For the building. Abi? For the equipment, the sales proceed for the equipment was how much? 14 million naira. Abi? Why the cost of acquisition is how much? 16 million naira. In the case of the equipment, the cost of acquisition is more than what? The sales proceed. Are we going to have capital gain or capital loss?
Loss.
Loss. That is how we arrive at negative loss of how much?
2 million.
2 million. So the last asset is what? Generating what? Set. For the generating set, the sales proceed is how much? 15 point what?
300.
3
15
million.
million. 300.
Why the cost of acquisition was what?
13,500.
Yes. So the difference between them is what? Capital what? Gain.
Then
Get your capital gain. So the question asks, compute the capital gain. Now, for the total asset now, for the TRIA of the asset, you need to get your total capital gain. How do we get our total capital gain? The capital gain for building is how much? 10 million naira.
10 million.
While the capital gain for generating set is how much?
1,800,000.
Yes. So
Yes.
the two together will give you what? 11,800,000.
11,800.
So do you understand? You will not minus capital loss from it. Oh. Do we understand? Do we
Yes, sir.
understand? So you will not minus capital loss from it. It's just the gain you have together. The second requirement now said, compute what? Rollover relief. We are asked to do what? Compute what? Rollover relief. So for the building now, how do I compute the rollover relief for the building? I know that the capital gain for building is 10 million naira. Abi? If I want to compute rollover relief, the formula for computing rollover relief is you have to compare the amount reinvested and the sales proceed. Which one is lower between the two? Amount reinvested in the new building is 75 million naira. The sales proceed that they sell the old building is how much? 45 million naira. Can we see that? So which one is lower among the two? 45 million naira is lower. Abi? So you take that 45 million naira, you now minus cost of acquisition of that building from it, which is how much? 35 million naira.
Yeah.
So
I'll come again, sir.
when you want to compute rollover relief, there are formula for computing rollover relief. Rollover amount, that rollover amount, how do we compute it? We have to use 3 factors to compute rollover amount. How many factors are we going to use? 3 what? 3 factors. The amount reinvested, the sales proceed of the old assets, and the cost of acquisition of the old assets. Amount reinvested in the new assets and the sales proceed of the old asset. You compare the two together. You now ask yourself, which one is lower? In the case of this question for the building, 75 million naira and 45 million naira, which one is lower?
45.
45. You now minus cost of acquisition of that old building from it. Do we understand? How much are we going to get? 10 million naira.
10 million.
That 10 million naira, which is the capital gain, is the amount rollover. That one means it's a full rollover. Is what? Full rollover. Do we understand? It's a full rollover in the sense that the sales proceed of the old asset, and it's also greater than what? The cost of acquisition. Do we understand? Do we understand?
We understand you to this point, sir. Right on.
Okay. So you get in this building now, there is a full rollover. All the capital gain of 10 million naira will be what? Rollover. All the capital gain of 10 million naira will be what? Rollover in full. That was for building. Do we understand? For equipment, we have capital loss. When there is capital loss, are we going to pay any tax?
No, sir.
No. So when there is capital loss, rollover relief will not be applicable. So the rollover amount will be nil when there is capital loss. We don't need to compare anything because there is a loss already. Are we going to pay tax on loss under capital gain? No. So the chargeable gain rollover will be what? Nil, because there is what? Capital loss. We cannot defy any tax because they make loss already. They are not making gain. It's only when they make gain that they will pay what? Capital gain tax. When they make loss, they will not pay capital gain tax. Do we understand?
Yes, sir.
So that is for equipment. The next one is generating sets. Look at the generating sets. He has a capital gain of 1.8 million naira. Do we understand? He has a capital gain of 1.8 million naira. Now, under that, the amount reinvested in the building is what? 30 million naira. Abi? Why?
Yes,
the sales proceed is what? 15.3 million naira. Do you understand?
Yes.
You first ask yourself, in this question now, the sales proceed is lower. The amount reinvested is lower than what? The sales proceed. I take it to the other side. Do we understand?
Yeah, we are following it, sir. We are following.
If he less cost of the old building from it, 13.5 million naira. Cost of the old building is even more than the amount reinvested. That means for this one, for generating set, is a no rollover relief. Is what?
No rollover.
No rollover relief, because the amount reinvested is less than fourth sales proceed. It's also less than which one again? Cost of acquisition of the old building. In such case, you will not pay, you will pay the capital gain tax in full. You will not roll any amount over. So that is the reason why, because if I said I want to less cost of building, I want to less it from 13 million, it will turn to us. If I want to less 13.5 million, it will turn to us. It will turn to negative. Do we understand? So this generating set is a nil rollover relief, in a sense that the amount that they reinvested is 13 million is less than 15.3 million sales proceed of the old asset. It's also less than what? The cost of acquisition of the old asset, which is what? 13.5 million naira. So in that case, there will not be rollover. The rollover amount, chargeable gain rollover, is also called rollover amount. It will be what? Nil. Do we understand? It's also nil. So this one, this generating set is a nil, no rollover relief or zero rollover relief, because the amount that they invested is less than what? The sales proceed, and it's also less than the cost of acquisition of the old building. What this one means is that the capital gain of that 81.8 million naira will be subjected to tax immediately. You will not defy it. Do we understand?
Mm-hmm.
Yeah. So the C part of the question, said, compute the capital gain tax. Compute what? Capital gain tax for each of the assets. The C part of the question said we should compute the capital gain tax for each of the assets. We know that for building, the sales proceed is 45 million. The cost of acquisition is 35 million. The capital gain is what?
10 million.
But B part of the building, how much do we roll over for building? In the B part of the question, how much do we roll over?
10 million. 10 million.
10 million. So when we minus amount rollover from capital gain, what will be the balance?
Nil. Zero.
Nil. Zero. Capital gain tax too will be what?
Will be
Nil.
zero.
Do we understand?
Yes.
Because the amount rollover for building is 10 million naira and the capital gain too is 10 million naira. 10 million naira capital gain minus amount rollover. The net capital gain payable or balance liable to capital gain will be what? Nil. 10% of that nil will be what? Nil. Do we understand? So that is how we get that. So that is for building.
So sorry, sir. So
Yeah.
there will be situation where the capital gain can be higher than the amount rollover.
Yes, there will be
Okay.
situations like that. There will
Okay.
be a
Okay.
situation like that. Yeah,
All right.
definitely.
Okay.
So
All right.
the next one now is the second one is what? Equipment, Abi. For the
Yes.
equipment,
Disposal of equipment.
14 million naira. The cost of acquisition is what?
16
The
million
cost of
naira.
acquisition. They have
16
what?
million.
Capital loss.
16 million.
Are we going
Yes.
to pay capital gain tax?
No.
No. So the capital gain tax too will be what? Nil.
Be nil.
Because of capital loss. Do you understand?
Yes, we do.
So you write that your CGT is nil because it's a capital loss. Now, the third one is what? Generating sets. Look at generating sets. The sales proceed is 15 million, 15.3 million. The cost of acquisition is 13.5 million naira. While the capital gain is what? 18 million naira. B part, do we roll over any amount for generating set in the B part of the question?
No, there was
Do
no
we-
amount roll. We do not roll over any amount. No.
No. So when you minus chargeable gain rollover from that 1.8 million naira, do we have any chargeable gain rollover? No. So our balance liable to CGT, net capital gain will be what? 1.8 million
1.8
naira.
million.
And the capital gain tax on it, 10% of it will be what? 180,000.
180,000.
That is how they get that. Do we understand?
Yes, sir.
So that is how we get the first question. So let's look at second question too. Second question too is relating to rollover. The second question too is relating to rollover. Bolu Nigeria Limited dispose is building. The second question, Bolu Nigeria Limited dispose is building located in where? Ifo for 750,000 naira on 7th of September 2015. The building was constructed at a cost of how much? 4.5 million naira in 2009. Advertisement cost pay for disposal of the building is how much?
200.
280,000.
Yeah, 280,000. Yes.
The company acquired a new building at a cost of how much? 6,410,000
6.4 million. Yes.
on September 2015. The lawyer commission for the acquisition of the new building amounted to what? 400 and what?
408,000. 408,000.
Compute the capital gain tax due. Compute what?
Capital gain tax due.
This question is different from the first question. The first question is asking us, we should compute capital gain first. We should compute rollover first. We should compute capital gain tax separate. You understand? But this question asks us compute capital gain tax due. What this one means is that we are going to add everything together in one solution. We are going to compute the capital gain, we are going to compute the rollover, and we are going to compute the capital gain tax. Do we understand?
Yes.
So let's look at the solution for this. If you look at my solution, in every solution, you have to write the company name. In every solution, you have to do what? Write the company name. The company now is Bolu Nigeria Limited. And the year of assessment. You know, capital gain tax is assessed to capital gain tax. Is it assessed to tax on actual year basis or preceding year basis?
Actually,
If you look at my solution, the asset was sold in what? 2015. So the asset, are we with me?
We are here.
Okay. So the asset was 2015. So the year of assessment is what? 2015. The sales proceed is 7,750,000. Abi? From the sales proceed, at the time of the sale, they incur what? Advertisements. You understand? Advertisement is part of selling expenses, like I explained last week. You less advertisement from it. Advertisement cost. You get what? Net what? Proceed.
Net sales proceed.
Yes. You now less the cost of acquisition. That building was acquired for how much? 4.5 million. You less it. You get your what? Capital gain. When you get your capital gain, the next thing for you to do is, after I get my capital gain, the B part of the question, I need to do amount to rollover. From the capital gain, this is my capital gain. Now, let me look at the amount rollover. I will compare the amount reinvested in the acquisition of the new building. How much they acquired the new building?
6,410,000.
6,410,000.
Yes.
Can we do that? And when they acquire the building, they also pay some commission. Which commission?
Lawyer fee.
Lawyer fee. You have to add it to the cost of the building. You have to do what? Add it to the cost of the building, because in accordance with IAS 16. Do you understand?
Yes, sir.
So the total cost of the building is now what? 6,800,000. You understand? Yes. Now, the net sales proceed for the old building is how much? That old
7.4 million.
Is 7,470,000. Abi? 6 million, 7 million. Which one is lower?
6 million.
So you can see that I put the 6 million in the other side. Do you understand? It means the amount reinvested is the lower. I put it in the other side. I will now less what from it? Cost of construction of that old building. How much did they construct the old building? I will less it from it, which is what? 4 point what? 4.5. Abi? So I will get the amount rollover. How much is the amount rollover? 2,390,000. Abi? Can we all see that?
Yeah, we
Yes,
can
sir.
see it.
Now, that amount rollover, you will minus it from the capital gain. How much is the capital gain?
2.9
much?
million.
2.9 million. Minus 2,390,000 from it. So what will be the net capital gain? Net capital gain. What will be the net capital gain or balance liable to capital gain tax? What will be that?
580,000.
580,000 naira. And you compute your capital gain tax on it. You do what? You compute your capital gain tax on it. Your capital gain tax 10%, it is going to be what? 58,000 naira. Do we understand?
Sir,
Yeah.
please can you share more light on that chargeable gain rollover? Why do we have to?
Dischargeable gain rollover. That is the rollover amount. Do you understand? What this question is saying, normally, the amount that's supposed to subjected to tax for capital gain tax, how much supposed to subjected to capital gain tax if there is no rollover? If they did not reinvest it, how much supposed to be for capital gain tax?
2,970,000. The capital gain.
2,970,000. Because
Yes,
they
sir.
reinvested the 2,970,000 supposed to give
Yes,
for
sir.
capital gain tax.
Yes,
You
sir.
understand?
Yes, sir.
But tax authority is now saying you will not pay capital gain tax on all these 2,970,000 since you have used the fund to buy a new what? Building. Do you understand?
Mhm.
In this question, which type of rollover do we have? Is it full? Is it partial? Is it no rollover?
It's partial.
Is what?
It's partial, sir, because the amount
Any
we invested.
other apart from any person again? Okay, explain why is it a partial?
Because the amount we invested is lower than the sales proceed, but is higher than the cost of acquisition.
That is correct. You are right. It's partial. It's partial. Perfect. Because the amount reinvested, how much is the amount reinvested? Total amount reinvested. How much? 6,890,000 is the total amount invested. You have to add the two together. Do you understand? Do we understand?
Yes, sir.
The net sales proceed of the old asset is how much? 7,470,000, Abi? Because
Yes,
it's
sir.
lower than net sales proceed of the old asset, but it's higher than the cost of acquisition of the old asset, which is what?
Oh,
4.5 million naira. That one is what? Partial what? Rollover. Do you understand? I want to ask a question and somebody else should answer. What if the amount invested is 10 million naira? In this question, what is the amount, the total amount invested is 10 million naira, and the net sales proceed is 7,470,000. Is it full or partial or no rollover?
that's really.
What do you say? The question I'm asking is, what if the total amount invested in the new asset is 10 million naira instead of 6,890,000, and the net sales proceed is 7,470,000? Is it full rollover? Is it partial rollover or no rollover?
To be full rollover. It will be full
Correct.
rollover.
It will be full rollover because the amount invested is greater than the net sales proceed, and it's also greater than what? the cost of acquisition. What if the amount we invested is 2,890,000 and the net sales proceed is 7,470,000, while the cost of construction of the old asset is 4.5 million? What type of rollover is that?
No rollover.
No what?
Rollover.
No rollover. Why?
Because the amount we invested is lower than the sales proceed and also lower than the cost of acquisition.
Correct. So that is how we should know that. Do we understand? Now, we should also have it in mind that anytime that there is a full rollover, they will not pay capital gain tax at all. Do we understand? But anytime there is a partial rollover, they will pay part of the capital gain tax. Secondly, anytime there is no rollover, all the capital gain will be subjected to what? Capital gain tax. They will pay full capital gain tax. Do we understand? So that is how that. So coming back to this question again, the amount invested is 6,890,000. The net sales proceeds is 7,470,000. Which one is lower? Amount invested. I put it. And now less cost of construction of the old asset from it. I less it. What did I get? I get 2,390,000. I now take it to the final side. I now less it from capital gain. 2,970,000. I less it from it. What did I get? I get 580,000. And the capital gain tax will be what? 10% of 580,000, which is what? 58,000. Do we understand? Do we understand?
Yes, sir.
We do
Okay.
understand, sir.
Okay. Now, let's go to question 3. Let's look at question 3. Let's look at question 3.
Sir, I
Question
have
3.
question. No, sorry.
Okay.
This amount we invested, the lower of amount we invested and the sales proceed.
Yes.
Why are they taking the lower of? Is it so that the amount that will be rolled over will not be too much? Is that why they are taking the lower of amount we invested and the sales proceed?
Yeah. Is why they are taking the lower of is that you cannot claim incentive more than the amount you realize. Take for instance,
Okay.
why they are taking the lower of is that
Mm.
sales proceed is
Mm.
the one that is due for tax.
Yes.
Do you understand? The amount you invested is not due for tax.
Mm.
Do you understand?
Mm.
And they want to give you incentive. Are they going to give you incentive for the amount you invested? They will give you based on the amount that is due for tax. Do you understand?
Yeah, I understand. The amount the gain can take,
Yes.
something like that. Okay, I understand. Okay.
Question 3. Can we look at question 3 now? Question 3 is relating to hire purchase. Is relating to what? Hire purchase. Ukogu Limited sold a plant to what? Ozoinshi on 31st of December 20 what? 2000 and what? 2007. For how much? For 5,200,000, which cost 3,250,000 to acquire it on March 2000 and what? 2015. That was when they acquired these assets. He sold the asset in 2000. She sold the asset in 2007. He acquired it in what? 2015. Now, the sales agreement provided that for payment of initial, the sales agreement provided for payment of an initial deposit of 2,080,000 on the date of sales. Why the balance of 3,120,000 is payable on what? 3 equal installments. 3 equal installments. Look at it. This person said an asset for how much? 5.2 million naira. And the cost he acquired the asset is 3,250,000. But the buyer said it's not going to pay in full. The buyer of the asset said it's not going to pay in full. He's going to pay on instrumental. He will first of all make a deposit of how much? 2,080,000. And he will now balance the payment of how much? 3,120,000. Now, the question now is, he's going to pay the balance in 3 equal installments. He's going to pay one in 2008. He's going to pay another in 2009. He's going to pay another in 2010. The buyer, which is Ozo Nishi, made the actual payment. The first payment he made is the initial deposit, which is 2,080,000. He now made another payment in 2008 as his promise, 1,040,000. Because if you divide 3,120,000 into 3, how much are we going to get? $3,120,000. If you divide it into 3, how much are we going to get?
1,040,000.
That is how they arrived at that 1,040,000. You know, look at it. The sales agreement provided that for initial deposit of how much? 2,080,000. And he's going, the balance, 3,120,000, he's going to pay it in how many installments? 3 what? Equal installments. If we add these two amounts together, 2,080,000 and 3,120,000, how much is he going to give you? 2,080,000 and 3,120,000. How much is he going to give?
5,200,000.
You can see that it's the same thing as the selling price, the sales proceed.
Yeah.
Do we understand? But the question now is that the seller, who is going to pay capital gain tax? Is it the seller or the buyer? Who is going to pay capital gain tax?
The seller now.
Now. Yes. Now, but the question now is that this seller does not receive the cash immediately. Do you understand? He received the payment on instrumental. Do we understand? He received the payment in instrumental. He received one payment, which is the initial deposit, in which year? 2007.
You go back.
He received another one in 2008. He received another one in 2009. And he received the last one in 2010. Do we understand? Do we understand?
Yes, sir.
Now, the law is saying that since he did not receive the 5.2 million at once, the capital gain tax that he's going to pay too, he has to pay it on instrumental. Do we understand?
Mm-hmm.
Since he did not receive the 5.2 million at once, the capital gain tax is going to pay too. He has to pay it on what? Instrumental. Look at how he now received the payment. 2008, 1.6, 2009, 1,040,000. Why in 2010 he received 260,000 instead of how much? Instead of how much he's supposed to receive.
So come again, say what, sir?
Look at the actual payment that the buyer paid. The buyer paid in 2,080,000, which is the initial deposit, Abi?
Yes.
In 2008, he paid one out of the installments.
Yeah.
2009, he now paid another one out of the installment. Do we understand?
Yeah.
Why 2010, he's supposed to pay the same 1,040,000, but he now paid that much.
260.
It means he has a balance of how much to balance.
780.
1,040,000 minus 260. He's going to balance of how much?
780,000.
780,000. Along the line, that buyer did not pay the 780,000 naira to the seller. Do we understand? He did not pay it. The buyer, they said he died. The balance of the 80,000 naira could not be recovered by the seller as at December 2012. Consequently, the balance was written off as what? Bad debt with the consent of FRS. You are required to compute the capital gain tax. This question is installment payment of capital gain tax. This question is what? Installment payment of what? Capital gain tax. He's going to pay the capital gain tax. The seller is going to pay it on installment. As the buyer is paying the installment, that is how the seller too is going to be paying the capital gain tax. Do we understand? So if you look at the solution, the first thing now is you first ask yourself, how much is the capital gain on the assets? How much is the capital gain tax on the assets? You compute the capital gain, you also compute the capital gain tax. If you look at my solution, can we see that?
Yes.
The sales proceed is what? 5.2.
Sure. Yes, sir.
The cost of acquisition is what? 3,250,000. Capital gain is how much?
1,950,000.
Why the capital gain tax will be what?
195,000.
195,000. Now, the question now is, how does he want to be paying this 195,000 capital gain tax? Is he going to pay it in 2007, which is the year that he sold the asset? Or is he going to pay it as the customer, the buyer, is paying him? He's going to pay it he's going to pay him based on the number of years that the customer, which is the buyer, is paying the seller too. Do we understand? Now, the first capital gain tax we compute capital gain tax for which of the year of assessment? 2007. We are going to use a formula. Anytime when there is an installment payment of capital gain tax, we are going to use a formula called installments all over sales proceed times the total capital gain tax. How much is the total capital gain tax in this question?
195,000.
That is that. 195,000 is the total capital gain tax. Now, how much installments or deposit the buyer paid in 2007? How much does he pay in 2007?
2,080,000.
2,080,000 all over the total amount he's supposed to pay. How much is the total amount he's supposed to pay? 5.2 million.
5.2
The same
million.
proceed.
Yes.
Times the total capital gain tax, which is what?
195,000.
How much are we going to get as capital gain tax for year 2007?
78,000.
78,000. It means he's going to pay government capital gain tax of 78,000 in what? 2000 and what? 7.
2007.
Do we understand?
Yeah.
In 2008, how much installment does he pay?
1,040,000.
1,040,000. All over the total amount of the sales proceed of the asset, the total amount that the buyer is supposed to pay is how much?
5.2.
5.2 times what? The total capital gain tax. Do we understand? Do we understand?
Yes, sir.
Yes, sir.
So the capital gain tax now will be what?
That's 195,000.
That is how we get that. We move to another year of assessment. Which one is the next year of assessment?
The third year.
2009. We do the same. How much does he pay in 2009?
Same 1.4. 140. 1,040,000.
So all over the total amount is supposed to pay, which is the total sales proceeds, the sales proceeds times 195. We get 39 million. Abi?
Yes, sir.
In 2010, how much installment does the customer pay?
260.
Yes. Now, let me explain that 2010 very well. In some cases, if the customer paid 260, if FRS want to compute your CGT in 2010, he pays 260 instead of how much he's supposed to pay in 2010.
1,040,000.
But the reason why we can use 260, because
So
the
he
question, the customer do what?
He died.
The customer died and
The
I could not pay.
amount cannot be what? Recovered.
Bad.
But in some other question, if the customer did not die, you understand? And the buyer, the seller does not make any effort to add the balance, I'm going to use it this year. It's only tax.
We didn't get to that.
I said in some other question,
Yes, sir.
if the examiner said the customer did not die, and the buyer, the seller does not make any effort to recover the debt. Do you understand? In such case, in 2010, if we want to compute the capital gain tax, how much are we going to use?
1,040,000.
1,040,000. We will not use 260 because it is the seller that is the negligence of the seller for him or her not to collect the balance. The customer is still alive. He did not make any effort. Do we understand?
Yeah.
Or the question said the customer, the buyer, is a relative to the seller. If the buyer is a relative to the seller, how much are we going to use in the third year?
104.
1,040,000.
1,040,000. Do we understand?
Yes, sir.
So that is how because the buyer is dead and the debt cannot be recovered. That is the reason why we use the 260. Do you understand? So that is that. So I think we have tried. Can we look at question 4? Let's look at question 4, which may be the last question. So
That's
let's
the end of
try
the
to
material.
That's
the end of the material.
What do you say?
The material end in question 3. Oh, I don't know. I'm not seeing question.
No, not in the question.
You don't have the updated one.
Okay.
You don't have
Sorry.
the updated one to the group chat now.
Hey. Okay. Sorry.
Where's the updated one now?
Sorry.
Who has the updated one?
Yeah, I'm opening it now. I have it now.
Okay. So let's look at question 4. Let's have 5-minute break. 5-minute break. Can we have 5-minute break? Or 7-minute break? Yes. So we come back to question 4 and look at. Are we there now?
Vinyl.
Okay. So let me read the question 4. Let me read it. Shukudi Meme Ezego Venture dispose of a building in Ojota, Lagos. The property was acquired in 2014 for how much? 3.2 million naira. The sitting tenant of the property finally vacates the property in January 2017, and a security man, Gardner, was immediately what? Employed to provide what? Security, and tied up the property until it was disposed of in what? July 2007. The following details were extracted from the book and record of the company. Sales proceeds of the property. Advertisement costs for disposal of the properties. Insurance premium against risks damage to the property. Depreciation of the property for 7 months. Security guide, Gardner wages for 7 months. Commission and fee for professional service on disposal. Transfer and conveyance fees. You are required. Compute the capital gains. That is A. B. Compute the capital gain tax payable. 5 mark. So you ask yourself, which year does it dispose the asset? Which year does it dispose the asset? Check the question. Look at the question. Which year was the asset disposed? Somebody should ask. Should answer. Are we there? Hello?
We are here.
Okay. Which year was the asset disposed?
The year the asset was disposed.
It was finally disposed in July 2000.
July 2017 now.
So the year of assessment will be what? 20 what?
2017. Yes.
So what is the sales proceeds of the assets? How much does it dispose? So let's go to the solution. Let's open the solution part. The sales proceeds is how much? 9 what?
9,600,000.
Okay, can we all see that? Now, selling expenses at the time of disposal, any expenses that they spend on the asset at the time they want to dispose the asset is called what? Selling expenses.
Expenses.
At the time they want to sell the asset, what are the expenses that they incur? Number one,
advertisement cost.
Yes, it's so important.
Commission fee.
Commission fee. Go back to the question. What about insurance premium paid on the asset?
Insurance is not there. It's not there. It won't be added.
Why?
Because they can't add insurance claim. They can't claim.
In my last class, I explained to you that there are some desirable expenses to gain tax. I mean,
yes, sir.
Because insurance is a type of tax. Company income tax cannot be, insurance of the building cannot be capitalized on the building. Do you understand?
Yes, sir.
So insurance premium paid on building is a disallowable. Depreciations too. Is it an expenses that we are using in capital gain tax?
No.
No. Do we understand? What about this one? Security guard and gardener salary, that they are protecting the property.
To be added, sir.
Eh?
To be added.
We should add it.
Yes, sir.
No, we cannot add it. Why? Security guard and gardener wages is not a selling expenses. Is it a selling expenses?
It's not selling expenses.
Yes, sir.
It's not a selling expenses. So this security, for the assuming the seller is a company, this security and gardener salary is an allowable expenses under which type of tax? It's an allowable expenses under what? Company
income tax.
If you go to my notes at the beginning, I explained that there are some expenses that are allowable under company income tax that they will be disallowed under what? Capital gain tax. Do we understand?
Yes.
So by virtue of that, we will not use security salary. So let's go back to the solution. Advertisement cost is part of selling expenses. Commission fee paid, the agency fee that you pay, is it not part of selling expenses?
Yes.
Conveyance fee, change of ownership fee, is it not part of selling expenses? You will add all the selling expenses. You remove it from the sales proceed. What are we going to get? Net what?
Proceed.
Net sales proceed. Now, less relevant cost. Relevant cost means cost of acquisition. How much do we acquire the building when we acquire it? How much do we acquire the building?
3.2.
3.2, that is the cost of acquisition. Can we see it in the question?
Yes, sir.
Go to the question. Now, anytime you acquire a building, if you incur any cost associated with the building that will improve the life of the building, are we not going to add it to the cost of the building?
Yes.
We add it. So look at any cost that was incurred at the time of purchase of the building. So what are the costs that were incurred at the time of purchase of the building? Or any cost that will improve the life of the building? Cost of what? Renovating the property. Is it not going to improve the life of the property?
Yeah.
Renovation cost. Is it not going to improve the life?
It's you.
It's going to improve. So we are going to add it to the cost of the building. We are going to add it to the cost of the building. So that is the reason why we add the two of them together. We had 3.2 million and what? 4,400,000. And we get what? 3,625,000. So how much is the capital gain?
5 minus the
From the net what?
proceed.
Net sales proceed. Yeah, you get what? 5 million what?
302.
302. So what will be your capital gain tax?
10% of that 5 million.
530,200. Do we understand?
Yes, sir.
You can see that this one is direct. This one does not have rollover. It's a direct capital gain tax question. Abi?
Yes, sir.
This question is trying to test you some expenses relating to capital gain tax. one thing you need to know in capital gain taxes, sales proceeds have some costs associated with it, with sales proceeds, with it. What are the costs associated with sales proceeds that we need to minus from sales proceeds?
Advertisement cost,
Yes, agency fee. Do you understand?
commission,
Valuation fee,
lawyers fee.
the lawyer account. So any cost you incur for you to ensure that the asset is being is disposed, is a selling expenses. We minus it. We will now get what? Net sales proceeds. The cost of the asset, too, when we want to minus it, there are some costs that we need to add to it. Cost of what? Improvement of the life of the asset, Abi?
Yes, sir.
Like renovation costs. Do you understand? Or the time that they buy the asset, they now incur some carrying costs, loading and offloading. Are we not going to add it to the cost of the asset?
You had it.
We had it because in line with what? IAS what? 16, property, plant and equipment. Abi? Capitalization of asset. Do we understand?
Mm-hmm.
Do we understand?
We do.
Yeah. So let's look at question 5. Question 5 too is direct. It's relating to partial disposal of an asset. I explained that last week. Partial what? Disposal of an asset. So let's read. Somebody should read for us.
Mrs. Adewale, who acquired a two-wing duplex at Festac Town at a cost of 50 million naira, later disposed one wing at 30 million naira, and the payment was valued at 80 million naira. The cost of valuation was 5 million naira, and the estate agent commission was 3 million naira. You are required to calculate the capital gain tax payable, identify a chargeable person and a body to which capital gains tax can be remitted. C. Describe partial disposal of an asset and how the cost of the partial disposal can be calculated or is calculated.
Thank you very much. Thank you very much. Mrs. Adewale acquired a two-wing of duplex at Festac Town at a cost of 50 million naira. Later disposed one wing at what?
It's
11 million naira. And part was left, value at what? 80 million naira. The cost of valuation was what? 5 million naira. And estate agent commission was how much?
2 million
naira. You are required to compute the capital gain tax payable. B. Identify chargeable persons or bodies to which capital gain tax can be remitted. C. Describe partial disposal of an asset and how the cost of partial disposal can be calculated. So the question Mrs. Adewale mentioned. He disposed the asset. Now, how much is the sales proceed? Part of the asset is disposed. How much? How much is the sales proceed for the parts?
It said
30
later
million.
dispose one wing at 30 million.
One wing. Abi?
Yeah.
That 30 million naira he disposed it. He has to pay agency fee, agent commission, Abi?
Yes, sir.
Of how much?
3
3
million.
million.
And They need to value the assets for them to dispose it off before they can dispose it to know how much it's worth. Abi? Valuation fee. How much is the valuation fee?
5
5
million.
5
million.
million.
That valuation fee too is part of selling expenses. Do we
Yes,
understand?
Mm.
So the two together will give us how much?
8
8
million.
million. We minus it from what? The sales proceed. Abi?
Mm.
Abi? We
Yeah.
minus it from the sales proceed. We get what? The
25.
net
Net
sales
sales
proceed.
proceeds.
When you get the net sales proceed, less cost of acquisition. The cost of acquisition now, for the part that was disposed, how do we get the cost of acquisition?
You divide it.
The old building, the whole of the building was how much?
50 million.
80
50
million.
million.
50 million. But the question now is part that is it disposed. It did not disclose everything. Abi? How
Yeah.
do we get the cost of the part that was disposed? So there is a working note I did. I did a working note. Cost of acquisition of the part that was disposed. There is a formula that I told you last week. A all over A plus B times what? Times C. If you go back to my notes, can you remember?
Yes, sir.
If you go back to my notes, under partial disposal of an asset, there is a formula called A all over A plus B times what? Times C.
C.
A stands for sales proceeds part that was not disposed. Do we understand? Do we understand?
When is breaking, sir?
I said there is a formula for us to get the cost of acquisition of the part that was disposed. Can you hear me now?
We can hear you.
If you want to get the cost of acquisition of the part of the asset that was disposed, there is a formula. That formula is A all over A plus B times C. If you go back to my notes under partial disposal of assets, you will see the formula there. I even explained the formula on Saturday. Do we understand?
Yes, sir.
A stands for sales proceed of the part that was disposed. While B stands for what?
Market value of parts.
That was not disposed.
Also.
So in this question now, our A is 30 million naira. Do we understand?
Yes, sir.
Why A all over A plus B times what? Times C.
Yeah.
C means cost of the acquisition of the whole entire building. Abi?
Yes, sir.
Yes.
So when you times it, you will get what? 13,636,000.
636.
So you
Okay.
minus it for what? The net what?
Sales proceeds.
So you get your what?
Capital
Capital
gain.
gain. And you compute your what?
CGT.
Capital gain tax. Assuming the question now go further that what is the cost of the part that was not disposed? Calculate the cost of the part that was not disposed. How do we get that?
Is it not part of the? Is it not the cost of the whole minus the part that has been disposed minus this
That's the
13,636?
thing. 50 million naira minus 13,636. Do we understand?
Yes,
Do we
sir.
understand?
Yes, sir.
So if they ask us to calculate the cost of the part that was not disposed, cost of the whole asset minus cost of the part that was disposed, it will give us cost of the part that was not what? Disposed. Do we understand?
Yes, sir.
So that is that. That is how they get that. So let's look at another one. Question 6. Question 6. In its effort to improve corporate image of Solek Limited, the board of directors approved relocation of the corporate head office from Lagos mainland to Ikoyi with effective from what? 1st of December 2000 and what? 2013. The ultra-modern corporate head office was acquired for 3,320 million on July 20 what? July 15, 2013. And the sum of 140 million naira was incurred on improvement and renovation. The old corporate office in Lagos mainland was built at a cost of what? 200 million naira.
200 million.
Eh?
200 million.
Yes, in 2006. It has a carrying value of how much? 300 million as at December 2012. And was disposed. It was disposed on 27th of July 2000 and what? 2013 for how much? 280 million. You are required to A, outline the tax implication of the disposal of Lagos mainland office and compute what? The relevant tax payable on disposal. 9 mark. This question, please, let's read it again. Let's read it. You can jot the main points from this question. The company has how many offices? In this question, the company has an old office. It's in mainland. They now said they don't like the office. They now go and build another one in where? In Ikoyi. Do we understand? Do we understand?
No, sir.
Yes,
This
sir.
company, they relocate their office, their corporate head office. From where? Mainland. Mainland is the old. Which one is the new asset?
Ikoyi,
which is the modern corporate head office. Do we understand? The sum of 140 million was incurred in improvement. It means, in this question, it means there is an asset that was disposed and they used the money to acquire none. They disposed one building. They used the money to acquire what? Another what? Another building. They disposed their old head office. They now have a modern head office. Look at the amount that they spent to acquire the new head office. They acquire it 120 million. They also pay 140 million for improvement. That was for new office. Let's go back to the old. The old office, they build it at a sum of what?
200
2
million.
million naira. How much did they sell it? 280 million naira. The question now says, outline the tax implication of the disposal of the Lagos mainland, which is the old office, and compute what? The relevant tax payable. This is a good question. Look at my solution. The first thing I mentioned is, if there is a chargeable gain resulting from disposal of the Lagos mainland head office, the gain will be subjected to what?
Capital gain tax.
Capital gain tax. The capital gain tax is chargeable at the rate of how much?
10%.
Third point, when the sales proceeds of the building is reinvested in purchase of another building of the same class as the one sold, rollover relief is going to be what?
Granted.
Granted. Now, let's compute the tax for the old asset that was. Are we going to compute the rollover, or what are we going to do?
Compute the rollover.
We compute the rollover and capital gain, Abi?
Yes, sir. First compute capital gain tax.
But this question, reading this question, is there a rollover relief in this question, or there is no rollover relief? Do we have a rollover relief in this question, or there is no rollover relief?
And this question, like you solve it for us. So.
Eh?
I said the question seems technical. I don't know if it's something you thought through.
Ladies and gentlemen, let's pay attention to this question.
Okay.
This question initially does not have rollover relief. Why? Despite that they have old asset, they have new asset. The question is that the reason why I say this question does not have rollover relief, the new asset was bought when?
2006.
When they bought the new asset. What is the date?
2013. 2013.
Was acquired in July what? They
July
acquired that
2013.
2013, July 2013. Do you understand? Now, the old assets was sold when? When they sold the old assets.
The old
Well,
2006 now.
The old asset was sold when? The old office. That was the carrying value.
2012.
Was disposed when?
2012.
No.
2006.
2013. 2013.
2014. First and foremost, ladies and gentlemen, that carrying value, we are not doing corporate reporting here. Ladies and gentlemen, can you hear me?
Yes, sir.
That carrying value of 300 million, we don't need it here. We don't need it in this question. Nothing concerns us. We don't do corporate reporting here. We in tax, what we know is what is the cost of acquisition, what is the sales proceeds, how much was the building constructed, how much is the building, the old building, how much is the total cost that they build the old building?
200 million.
Abi? How much that they sell the old building? 200 and what? 280 million.
280 million, yes.
This question is supposed to have a rollover. But the reason why it does not have a rollover is that the old building was sold after they bought the new building. Look at the date that they bought the new building. Do we understand? This question is very technical. You have to be careful. Look at the day that they bought the new building. They bought it July what?
13.
13. and the old building, they sell it July 27. Can we say they use the money of the old building to buy the new building? Can we say that? The date here is very important. The date in this question is very important. The new building was bought 320 million. When?
15 July
15 July. That old building, they sell
was
it
sold. Oh,
27.
of July.
Rollover cannot be applicable. They did not use the the sales proceeds of the old building to reinvest in another building. Can we? Do you understand?
Yes, sir.
Assuming they sell the old building before they buy the new building, we can apply rollover. Do we understand?
Yes, sir.
Assuming the old building now was sell 1st of July, they now buy the new building 15th of July. We can say rollover relief apply, that the sales proceeds from the old building
Was used
is
to
what
buy
we invest in another
by
building.
Union Court.
Do we understand?
Yes, sir.
So before you can do anything here, you have to look at the date. Date. The date is very important here. It means the company used money from somewhere to buy the new building. Do we understand? They did not use the money of the old building to buy the new building. So definitely, rollover relief will not be applicable. Do we understand? Do we understand? Do we understand?
I don't understand. Oh. Sorry. Sorry.
Lagos mainland. The old building was sold when?
He said the old corporate office in Lagos mainland built at a total cost of 200 million in 2006
Continue.
and had a carrying value of 300 million as at 31st December 2012 and was disposed of on 27th July 2013 for 280 million.
200 and what?
80 million, sir.
27 or what?
27th of July 2013.
The question I want to ask you now is it after they buy the new building that they dispose the old building, or before they buy the new building?
Yes.
They
The
buy
new
the
building was bought before
July.
disposing the old one. The new building was bought before disposing the old one.
Yes. So can we say they use the old building sales proceeds to buy the new building? Can we say that?
No.
No. So that means rollover relief is not applicable in this question.
Sir,
Hi,
please,
Radio.
hello, sir.
Yes, sir.
In the conditions you gave us for granting rollover, there was a place where you said that if the asset was bought, that's if it was acquired a year before or after disposal. So, had even this asset now, this new one now, was acquired like a year before they disposed the old one, like how do you treat such kind of situation?
The asset was acquired after disposal of the what? Old building, not before disposal of the old building. Go and look at the condition very well. After disposal of the old
There is
building,
before.
do what?
what you wrote there was before, then in brackets after. So it was looking contradictory.
It's after, sorry. It's after.
Mhm.
Okay.
Do you understand? Please take note of that. Condition is after 12 months after disposal of the old building. But this one, they have buy the new building before disposal of the old building. Do we understand? So in a summary, where the examiner is going in this part A, the examiner does not want you to compute rollover. They just want you to compute the capital gain tax direct, because rollover relief does not apply based on the dates. Do we understand? Do we understand?
Yes, sir.
Do we understand? So
Yes,
that
sir.
is how we compute that. So let's go to the solutions now. The computation. Look at it. For the old building, it was sold how much? 280,000.
20,000, yeah.
The cost of acquisition is how much?
200 million.
So the capital gain is how much? 80,000.
80.
Why the capital gain tax will be what?
8,000.
80 million. The capital gain tax is 80 million.
80 million.
Why the capital gain? The capital gain is 80 million. Why the capital gain tax is what?
8 million.
8 million. We cannot apply rollover relief in section A of this question. We cannot put new building here because they did not use this 280 million. What we are saying is they did not use this 280 million. They did not use part of it to buy the new building. Can we agree? Can you agree with me based on the dates? Because before they get this 280 million, they have already buy the new building. Do you understand?
Yeah.
So we cannot do rollover here. We cannot say there is a new building, they reinvest amount. We cannot do rollover here. So be part of the question. Be part of the question. What is the B part of the question? B part of the question said, ascertain the cost of the new ultra-modern head office for the purpose of capital gain tax and capital allowance. So what will be the total cost of the new head office? Oh yeah, you're supposed to do that by your own. Look at the new head office. How much does it acquire?
Yeah, but it was apart for 220 million.
Yeah, they also spend what?
Maybe I hope you deleted that video. I thought you deleted it more. It's deleted.
What do you say?
I don't think she was talking to us.
Okay. It was acquired, cost of acquisition, for you to get the total cost of the new building, cost of acquisition plus
Innovation.
improvement and what?
Innovation.
Simple as ABC. That is how we get that. You can see that giving us what?
Plus 140, that's 460 million.
460 million. You can see that part B.
Yes, sir.
So C part of the question. What is the C part of the question saying?
Complete relevant tax due. Complete the relevant tax due, assuming the old building was disposed on 27 June 2013 for the same amount and cost of the new ultra modern head office.
They say we should assume that the old building was do what?
Was disposed June, not July.
Okay. So what does the examiner want us to do here?
Want us to treat relief, I guess.
Rollover relief.
Yeah, rollover relief.
Because June was before
Yes,
before the new building was acquired when?
July 15.
Can you see that June was before July?
Yes, sir.
So we can assume that they use the money in this C. We can assume that they use the proceeds of that to buy what?
To buy the new building.
To buy the new building. Rollover relief. The examiner wants us to compute rollover relief here. Do we understand?
Yes, sir.
So now let's look at it. So for us to compute the rollover relief for the old bidding, how much do we sell the old bidding? 280 million. Abi? Are we
Yes,
there?
yes, sir.
Cost of acquisition 200.
Mhm.
So why the capital gain is how much? 80 million. Do we understand?
Yes, sir.
Let's apply rollover. Rollover is saying that lower of what? Amount what? Reinvested. How much was reinvested in purchase of the new building?
No, that's 320 plus 140 is 4.6 something. 460.
What is the net sales proceed of the old building?
280.
So which one is lower among the two?
280 is lower.
So with less cost of acquisition from it. Now, in this question, which type of rollover? Is it full? Is it partial? Is it the no rollover?
Full rollover. Full rollover.
Full rollover, because the amount we invested is greater than what? The sales
Sales
acquisition of the old building. In full rollover, are we going to pay capital gain tax?
No.
No.
We're not going to pay. In full, are we going to pay capital gain tax?
No, sir.
No, we are not going to pay. In partial, are we going to pay capital gain tax?
Yes.
Yes, we are going to pay certain part of the capital gain tax. In nil rollover, are we going to pay full capital gain tax?
Yes.
Yes.
Full capital gain tax.
So
full capital gain tax will be payable.
Yes. So looking at this question now, since 280 is less than 460, we minus cost of construction of that old building from it. Our amount rollover will be 80 million. Capital gain is 80 million. Amount rollover is 80 million. Net capital gain will be how much? Need. When you minus capital gain from amount rollover, we get net capital
zero. Yes, sir.
So it's nil. So your CGT will be how much? Nil. Now, the question go further said, see on that section C. Let's go back to that question C and read it very well. He asks us two things. You should compute the relevant tax due, assuming the road building, and cost of what?
Of the new ultra modern head office.
Now, cost. If you want to get the cost of any time we apply rollover, after we have applied rollover, if we want to recognize the cost of the new assets, after we have applied rollover, if we want to recognize the cost of the new asset, we said cost of the building, the cost of acquisition, the total cost, we now less the amount we roll over from it. Do we understand? If we want to get the cost of the new building after we have applied rollover, the total cost of that new building, the total amount reinvested, which is 460,000, we will now less rollover amount. This one is called carrying cost. In some textbook, you see it carrying amounts. Do we understand? Do we understand?
Yes, sir.
Okay. So that is how this question looked like. So the last part of the question said, explain the concept of capital gain tax arising on asset on which rollover relief have been granted. Explain what? The concept of capital gain tax arising on assets on which rollover relief have been granted. So what the examiner wants you to do here is to write anything you know, everything you know on rollover relief. First and foremost, capital gain tax on disposal of an asset is different between what? Sales proceed and the carrying cost. This question is saying that after they have granted rollover relief, I want to explain something. Let's pay attention in this C part of the question. Now, after we have granted rollover, this new building, what is the cost now? The cost is the total cost, the total amount invested, less amount rollover. The cost is now how much? 380.
Yes, sir.
In the future, if they want to dispose this new building, if you want to compute capital gain tax on it, if they dispose this new building, if they want to compute capital gain tax on it, sales proceeds less carrying amount is what we are going to use to get capital gain tax. In this case, we are going to say the amount that they dispose that new building less 380. So what the examiner is asking you is that after rollover relief has been granted, computation of capital gain tax will change on the new asset if eventually the new asset is disposed.
Okay.
Capital gain tax now, it's not going to be sales proceed minus cost of acquisition again. It's going to be sales proceed
minus
carrying costs. That is what the examiner is going here. Understand? Sales proceed minus what? Carrying costs. What we are saying now is this new asset, maybe after 4 years, after 5 years, they now dispose it. They dispose it. For you to compute the capital gain tax, you will not say sales proceed minus cost of acquisition again. No. You will say sales proceed minus what?
Carrying costs.
Carrying costs. How do we get the cost of the new asset, which is the amount reinvested, less amount what?
Rollover.
Anytime rollover relief has been granted, there will be what? There will be carrying costs. And how do we get carrying costs? Cost of the new less
the rollover
amount. Some question may go further. They will say, after 5 years, this particular asset was disposed for this part. Maybe the company want to fold up. They now dispose it for 60 million, 600 million. We should compute the capital gain tax. So if you want to compute the capital gain tax, what do we do? 600 million minus what?
Minus 380.
Minus the 380. Minus 380, which is the carrying cost. We get our capital gain and we compute 10% capital gain tax. Do we understand?
Yes, sir.
So thank you very much. So thank for your time for your audience. So by God's grace, our next class will be taxation of specialized business. So that will be on next week, Saturday or Monday, depends. So it's Mr. Chris that will take the coming class on this Saturday. So thank you very much.
Thank you, sir.
Thank you, sir.
Let us have the recorded version, please.
Do you have any question? Do you have any question?
Yes, sir.
Okay, what is your question?
I don't have any questions, sir.
Okay, okay. Okay, thank you very much. Thank you.
Thank you, sir.
Yeah, you are welcome. Yeah. So, secondly, I'm sorry for the late, so but by next week, I promise everything will be okay. So we will share it live and direct. So thank you very much.